Right now, as you're watching this, CRA auditors are in the most aggressive 5 weeks of their entire year. CRA's fiscal year ends March 31st, and the Auditor General of Canada found that 40% of all audit files get closed in just February and March. So if you own a corporation, crypto, rental properties, or investments, if you've claimed home office expenses, principal residences, vehicle deductions, contractor payments, this affects you directly because the next 5 weeks are when CRA is most likely going to contact you, tighten deadlines, and push to close your file. Today, I'm going to show you exactly what actually happens inside CRA from the auditor's side of the table and exactly what to do about it. Let me start with the number that should change how you think about every CRA letter you've ever received. The Auditor General of Canada looked at what happens when taxpayer actually fights CRA assessments. 65% of the objections were decided fully or partially in the taxpayer's favor. Think about what that means. CRA is actually telling you when you owe money and when people push back, more than half the time, CRA's own number was wrong. Now, fully or partially matters. Some are complete reversals, some are partial wins, but the direction is overwhelming. And it's getting really worse. In 2024, 2025, CRA received approximately 128,000 objections, up 47% in a single year. That's not Canadians suddenly becoming less honest. That's Canadians increasingly saying, you got this wrong. So here's what that means for you. If CRA sends you a reassessment, don't panic. That number is just a starting position, not a final answer. But if CRA is wrong this often, the obvious question is why? That's where things get really interesting. CRA says auditors don't have quotas, and technically, there may not be a specific number assigned to each person, but CRA has something that creates exact same pressure. It's an internal performance metric called TEBA, tax earned by audit. It tracks how much tax gets assessed, not how much that gets collected, not how much gets upheld when you fight back, just the amount assessed. The C.D. Howe Institute studied the system in 2016 and concluded some auditors may be auditing in ways that satisfies the evaluation system rather than with a view to the fairest amount of tax due. But here's the part that should change how you think about every audit. TEBA doesn't get adjusted when reassessments are overturned. An auditor assessing you $500,000, you fight for it for 2 years, it drops down to $50,000. That auditor's TEBA still shows $500,000. No corrections, no consequence of being wrong. And I'm not the only one who's saying this. I posted about TEBA on our community tab, and someone who's been inside the system responded. For GST HST, they call it the strike rate. Same concept. When the numbers are high, managers get rewarded. That's the culture we're talking about. Even a senior CRA official acknowledged in 2018 Canadian Tax Foundation conference that TEBA-driven incentives have led to reassessments unlikely to survive on appeals. Look, I don't blame individual auditors. They're operating inside a system that measures the wrong thing. But you need to understand what the system is, because when you're sitting across from the auditor, they're being evaluated on the size of the assessment, not whether it's right. And that brings us to why the next 5 weeks are different from the rest of the year. CRA's fiscal year end, March 31st, TEBA targets are annual. So every February and March, there's structural pressures to finalize cases before the clock runs out. CRA's workforce has grown roughly 47% over the last decade to about 59,000 employees. More auditors, same year-end deadline, same pressure to close. Now let me walk you through what this actually looks like from all three sides of the table, because this is the part nobody talks about. Think about the auditor. It's February. They have open files on their desk, 5 weeks left in the fiscal year. The system measures their output in dollars assessed. That pressure changes behavior. An auditor in October might give you 30 days to find supporting documents. That same auditor in March, you might get 15 days. They're less willing to grant extensions, less willing to accept gray area deductions in your favor, less willing to have follow-up discussions. And when deadline is tight, decisions become binary. And on gray area tax issues, which is most of what gets audited, Binary decisions almost always go against you. Now, think about the taxpayer. You get the letter from the CRA. Your first reaction? Fear. You assume CRA might just be right because it's the government. You don't know that 65% of objections succeed. So you do one of two things. You accept the number or you try to handle it yourself. And that's exactly what the system is designed for. Assess high, hope they don't push back. The biggest enemy isn't CRA, it's your own instinct to comply without questioning. Now, here's a third perspective. I have sat across from auditors during February and March more times than I can count. And when you understand the pressure they're under, it changes how you handle the entire process. A good tax professional knows the auditor needs to close the file. That is strategic information for us. You know which adjustments are real and which ones are year-end padding. You know the objection process exists as a design release valve. You know that $200,000 proposal in March might become $45,000 after a proper objection. Someone walking in alone doesn't have any of this context. And that's why the single most important thing you can do, especially in the next 5 weeks, is not walk in alone. And this system is only getting more powerful. CRA is deploying AI for audit selection and risk scoring. Crypto exchanges will start reporting directly to the CRA for the 2026 calendar year, and Budget 2024 has proposed new enforcement tools, including a $50 a day penalties for non-compliance. That's working through the legislative process right now. Look, there's more data, more automation, same incentive structure. The window to get your house in order is now. So, what do you actually do with all this? Here's the playbook. Before CRA ever contacts you, you need to do all these things. 1. Clean up your records. Keep 6 years of organized documentation. If you have expenses you can't support with receipts or clear paper trail, fix it now. Messy books are the number one thing that turns a routine review into a full-blown audit. 2. Separate personal and business clearly. Home office expense, vehicle use, contractor payments. Document the business use percentage with specifics. I use car for my work doesn't just cut it anymore. CRA wants dates, distances, purpose. 3. Get a pre-audit risk review. Have a tax professional look at your filings the way CRA would. Find the vulnerabilities before CRA does. If you're in an audit right now or you get connected in the next 5 weeks, you need to do these things. 1. Get a tax professional involved immediately at the start of the audit, not after the reassessment. They understand the system, the pressure, and the process. 2. Respond to everything on time, but strategically. Get all requests in writing, confirm exactly what they're asking for, provide what's requested, nothing more. 3. Document every interaction, the agent name, dates, what was discussed, and what did you provide. The paper trail matters more than you'd expect. And here's one thing specific to the next 5 weeks. If an auditor is under year-end pressure, they may give you tighter response deadlines than normal. They may be less willing to give you extensions. Don't assume you'll get the flexibility you'll normally get. If you need more time, ask it in writing and have your tax professional make that request. It carries more weight, trust me. If you get a reassessment, 1. Mark 90-day objection deadline the day you receive the notice of reassessment. Non-negotiable. If you miss it, you may be able to apply for 1-year extension, but there's no guarantee you'll actually get it, so don't risk it. 2. File a notice of objection. There's a 65% success rate. The process exists because the system chronically overassesses. Use it. 3. Know the filing an objection doesn't always pause CRA's collection activity. Depending on your situation, CRA still may pursue payment while the objection is under review. Talk to your tax advisor. If your objection is unsuccessful and you believe your reassessment is still wrong, you still have the right to appeal to the tax court, and that's when you'll bring in a tax lawyer. I've put all of this together into a downloadable checklist. Head to theadvisorstable.com. Same framework I walk through my clients. And one last thing, not everyone needs to panic. If your books are clean, your records are organized, and you have documentation for everything you ever claimed, you're in good shape. The system is aggressive, but it has much harder time with people who are prepared. But If you have been loose with record keeping, you've been claiming expenses you can't fully support, the next 5 weeks are your wake up call. Either way, now you understand how the system actually works, and that puts you ahead 95% of the Canadians. I've been doing this for 15 years, and I have sat across too many people who have accepted CRA numbers that they shouldn't have because nobody told them how the system works. CRA says there are no quotas, and maybe there aren't on paper, but the system doesn't need a quota to be aggressive. It just needs an incentive. And now you know exactly what that incentive is. Your job isn't to fight the system, it is to understand and plan accordingly. If this was useful, subscribe. I put out videos every week breaking down the tax strategies that actually protect your money. And if you know someone that needs to hear this before March 31st, send it to them. Thank you, and I'll see you in the next one.